Chapter number 19, Professional Ethics and Liabilities of Auditors. So we'll directly dive into introduction part. The Oxford Dictionary states ethics as the moral principle that governs a person's behavior or how an activity is conducted. It is the branch of knowledge that deals with moral principles, whereas professional ethics consist of personal, organizational, and corporate standards of behavior expected for professionals. Chartered accountants, as professionals, are engaged in building trust to vast variety of users, whether shareholders, government, banks, investors, employees, or others, which imposes a public interest responsibility on their profession. Like other professions, chartered accountants also have some sort of code of ethics. This code of ethics establishes ethical requirements for professional accountants. A chartered accountant, either in practice or in service, has to abide by these ethical behaviors. They are expected to follow the fundamental principles of professional ethics while performing their jobs. Service users of professionals should be able to feel secure that there exists a framework of professional ethics which governs the provision of those services. Any deviation from the ethical responsibilities brings the disciplinary mechanism into action against the chartered accountants. Code of ethics and its necessity. Ethics are as old as human civilization. It's nothing but the laws or rules of acceptable behavior. The whole foundation of any profession, particularly CA profession, is its credibility. The sole purpose of code of ethics is to ensure and uphold this credibility. The main ingredient of our profession is independence. An auditor needs to be independent while carrying out his audit. The provisions discussed in the same ensure that independence of members of the institute is not affected. Our motto, Ya Isha Sukteshu Jagrati, is adopted from Kathopanishad and it denotes eternal vigilance, awakening when the world is asleep. A distinguishing feature of the accounting profession is its acceptance of the responsibility to act in the public interest. The Code of Ethics seeks to protect the interest of the profession as a whole. It is a shield that enables us to command respect. Overview of the Code of Ethics. The revised Code of Ethics contains the following material. Part 1, complying with the code, fundamental principles and conceptual framework, which includes the fundamental principles and the conceptual framework and is applicable to all the professional accountants. Part number 2, professional accountants in service, which sets out additional material that applies to professional accountants in service when performing professional activities. Professional accountants in service include professional accountants employed, engaged or contracted in an executive or non-executive capacity. For example, commerce, industry or service, public sector, education, NPO, that is not for profit organizations, regulatory or professional bodies, etc. Part 2 is also applicable to individuals who are professional accountants in public practice when performing professional activities pursuant to their relationship with the firm as an employee. Part number 3, professional accountants in public practice, which sets out additional material that applies to professional accountants in public practice when providing professional services. Independent standards, which sets out additional material that applies to professional accountants in public practice when providing assurance services as follows. Part 4A is for independence for audit and review engagements, which applies when performing audit or review engagements. And Part 4B is independence for assurance engagement other than audit and review engagement, which applies when performing assurance engagements that are not audit or review engagements. Glossary, which contains defined terms together with additional explanations where appropriate, and describe terms which have a specific meaning in certain parts of the code. For example, as noted in the glossary, in Part 4A, the term audit engagement applies equally to both audit and review engagements. The glossary also includes a list of abbreviations that are used in the code and other standards to which the code refers. Overview of the code of ethics, and it's given in the diagram which we have read out aloud in the past paragraphs. So next one is the code. The code contains sections which addresses specific topics. Some sections contain subsections dealing with specific aspects of those topics. Each section of the code is structured where appropriate as follows. Introduction sets out the subject matter addressed within the section and introduces the requirements and application material in the context of the conceptual framework. Introductory material contains information including an explanation of terms used, which is important to the understanding and application of each part and its sections. Requirements establish general and specific obligations with respect to the subject matter addressed. An application material, it provides the context, explanations, suggestions for actions or matters to consider, illustrations and other guidance to assist in complying with the requirements. A professional accountant shall comply with the code. There might be circumstances where law or regulations preclude an accountant from complying with certain parts of the code. In such circumstances, those laws and regulations prevail, and the accountant shall comply with all other parts of the code. Fundamental principles. In order to achieve the objectives of the accountancy profession, professional accountants have to observe a number of prerequisites or fundamental principles. The fundamental principles as discussed in the Code of Ethics of ICI to be complied are given below. Integrity, objectivity, professional competence and due care, confidentiality, professional behavior. Integrity, which is subsection 111, that is 111. A professional accountant shall comply with the principle of integrity, which requires an accountant to be straightforward and honest in all professional and business relationships. Next one. Integrity implies fair dealing and truthfulness. A professional accountant shall not knowingly be associated with reports, returns, communications or other information where the accountant believes that the information contains a materially false or misleading statement, or it might contain statements or information provided negligently, or omission or obscuring required information where such omission or obscurity would be misleading. However, a professional accountant will not be considered to be in breach of matters mentioned above in paragraph 2 if the professional accountant provides a modified report in respect of such above mentioned matter. When a professional accountant becomes aware of having been associated with the information described in para 2, the accountant shall take steps to be disassociated from that kind of information. Heading 2, Objectivity, subsection 112. A professional accountant shall comply with the principles of objectivity, which requires an accountant not to compromise professional or business judgment because of bias or conflict of interest or undue influence of others. A professional accountant shall not undertake a professional activity if a circumstance or relationship unduly influences the accountant's professional judgment regarding that activity. Next heading, professional competence and due care. Subsection 113. A professional accountant shall comply with the principle of professional competence and due care, which requires an accountant to attain and maintain professional knowledge and skill at the level required to ensure that a client or the employing organization receives competent professional service based on current technical and professional standards and relevant legislation, and act diligently in accordance with applicable technical and professional standards. Serving the clients and employing organizations with professional competence requires the exercise of sound judgment in applying professional knowledge and skill when undertaking professional activities. Maintaining professional competence requires a continuing awareness and an understanding of relevant technical, professional, and business developments. Continuing professional development enables a professional accountant to develop and maintain the capabilities to perform competently within the professional environment. Diligence encompasses the responsibility to act in accordance with the requirements of an assignment carefully, thoroughly, and on a timely basis. In complying with the principle of professional competence and due care, a professional accountant shall take reasonable steps to ensure that those working in a professional capacity under the accountant's authority have appropriate training and supervision in that area also. Where appropriate, a professional accountant shall make clients, employing organization, or other users of the accountant's professional services or activities aware of the limitations inherent in the services or activities involved. Next heading, confidentiality, subsection 114, that is 114. A professional accountant shall comply with the principle of confidentiality, which requires an accountant to respect the confidentiality of information required as a result of professional and employment relationships. An accountant shall be alert to the possibility of inadvertent disclosure, including in a social environment and particularly to a close business associate or an immediate or a close family member. Maintain confidentiality of information within the firm or employing organization. Maintaining confidentiality of information disclosed by a prospective client or employing organization. Don't disclose confidential information acquired as a result of professional or employment relationships outside the firm or employing organization without proper and specific authority unless there is a legal or professional duty or right to disclose. Don't use confidential information acquired as a result of professional and employment relationship for the personal advantage of the accountant or for the advantage of a third party. And don't use or disclose any confidential information either acquired or received as a result of professional or employment relationship after that relationship has ended. Take reasonable steps to ensure that personnel under the accountant's control and individuals from whom advice and assistance are obtained respect the accountant's duty of confidentiality. Point number 2, confidentiality serves the public interest because it facilitates free flow of information from the professional accountant's client or employing organization to the client in the knowledge that the information will not be disclosed to a third party. Nevertheless, the following are the circumstances where professional accountants are or might be required to disclose even confidential information, or when such a disclosure might be appropriate. These are the circumstances. Number 1, disclosure is required by law. Number 2, disclosure is permitted by law and it is authorized by the client or the employing organization. Number 3, there is a professional duty or right to disclose when not prohibited by law. To comply with the requirements of peer review or quality review of the institute, to respond to an enquiry or investigation by a professional or regulatory body, to protect the professional interest of a professional accountant in legal proceedings, to comply with technical and professional standards including ethical requirements. Point number 3, in deciding whether to disclose the confidential information, professional accountant should consider the following points. Point A, whether the interest of any party including third parties whose interest might be affected could be harmed if the client or employing organization consents to the disclosure of information by professional accountant. B, whether all the relevant information is known and substantiated to the extent it is practicable, the proposed type of communication and to whom it is addressed, and whether the parties to whom the communication is addressed are appropriate recipients or not. A professional accountant shall continue to comply with the principle of confidentiality even after the end of the relationship between the accountant and the client or employing organization. When changing the employment or acquiring a new client, the accountant is entitled to use prior experience, but he shall not use or disclose any confidential information acquired or received as a result of a professional or employment relationship. Professional behavior. Subsection 115. A professional accountant shall comply with the principle of professional behavior, which requires an accountant to comply with relevant laws and regulations and avoid any conduct that accountant knows or should know might discredit the profession. I tell you again, discrediting the profession. I repeat, any conduct that accountant knows or should know might discredit the profession. Okay. Next, the conduct that might discredit the profession includes conduct that a reasonable and informed third party would be likely to conclude adversely affects the good reputation of the profession. A professional accountant shall not knowingly engage in any employment, occupation, or activity that impairs or might impair the integrity, objectivity, or good reputation of the profession, and as a result would be incompatible with the fundamental principles. When promoting himself and his work, a professional accountant shall not bring the profession into disrepute. A professional accountant is required to conduct his affairs in a manner that he remains outside the boundaries of a professional and other misconduct. A professional accountant shall be honest and truthful, and he should not make exaggerated claims for the services they are able to offer, the qualifications they possess, or experience they have gained, or he should not make disparaging references or unsubstantiated comparisons to the work of others, and he should not make any direct or indirect measures to advertise any professional or other facts which are in violation of advertisement guidelines issued by the Council of the Institute from time to time. The professional accountant should ensure that the contents of an advertisement are true to the best of his knowledge and belief, and it is in conformity with the advertisement guidelines, and be aware that the institute does not own any responsibility whatsoever for such for such content or claims by him. However, if a professional accountant is in doubt about whether a form of proposed advertising is appropriate, the accountant is encouraged to consult with the Ethical Standards Board of CA Institute. A professional accountant shall comply with each of the fundamental principles. The fundamental principles of ethics establish the standard of behavior expected of a professional accountant. The conceptual framework establishes the approach which an accountant is required to apply to assist in complying with those fundamental principles. A professional accountant might face a situation in which complying with one fundamental principle conflicts with complying with one or more other fundamental principles. In such a situation, the accountant might consider consulting with others within the firm or employing organization, or with those charged with governance, or the CA Institute, or with a legal counsel. However, such consultation does not relieve the accountant from the responsibility to exercise professional judgment to resolve the conflict, or if necessary and unless prohibited by law or regulation, disassociate from the matter creating the conflict. The professional accountant is encouraged to document the substance of the issue, the details of any discussions, the decisions made, and the rationale for those decisions. Threats, evaluation of threats and safeguards. The conceptual framework specifies an approach for a professional accountant to identify threats to compliance with the fundamental principles, evaluate the threats identified, and address the threat by either eliminating or reducing them to an acceptably low level. Number 1, threats. Threats to compliance with fundamental principles fall into one or more of the following categories. There are totally 5 threats. Threat number 1, self-interest threat. Threat number 2, self-review threat. Threat number 3, advocacy threat. Threat number 4, familiarity threat. Threat number 5, intimidation threat. The following are examples of facts and circumstances within each of those categories of threats that might create threats for a professional accountant when undertaking professional services. Before going on to the examples, let us know what is the meaning of each and every threat. Self-interest threat, the threat that a financial or other interest will inappropriately influence a professional accountant's judgment or behavior. Self-review threat, the threat that a professional accountant will not appropriately evaluate the results of a previous judgment made or an activity performed by the accountant or by another individual within the accountant's firm or employing organization on which the accountant will rely when forming a judgment as part of performing current activity. The threat that a professional accountant, next one is the advocacy threat. The threat that a professional accountant will promote a client's or employing organization's position to the point that the accountant's objectivity by itself is compromised. Next one is familiarity threat. The threat that due to a long or close relationship with a client or employing organization, a professional accountant will be too sympathetic to their interest or too accepting of their work. And last one is intimidation threat. It says the threat that a professional accountant will be deterred from acting objectively because of actual or perceived pressures, including attempts to exercise undue influence over the accountant. With this, we'll finish this episode. In the next episode, I'm going to read to you all the examples of 5 different threats. Thank you.